Yeah, we are good to.
Hello and welcome, ladies and gentlemen. Welcome to Nirmal. I'm here all that. Yeah, we have Kunal Shah, Head of Commodities Research, joining in. Kunal, overall, in terms of crude, you've always, right now, in the last couple of days, come out and said that this is not the bull run, though we've hit a new high of almost $30 per barrel. In fact, today itself, if you go to see, we have crude prices which dropped almost around 5 to 7%. What's the sense that you're picking up on this front? Because mainly, I mean, what we read it as is it's mainly because of the China US tensions. That's something which is impacting crude prices. What is the overall setup and the fundamentals? How are the fundamentals looking like?
Yeah. So first of all, we have been expecting oil prices to test $30,
Hmm.
but we were expecting it to test it in the month of June. But
Hmm.
markets were way ahead, have run out of the fundamentals, and we've already seen 2600 for the June contract being tested. So I'm not very bullish from the present levels. Mainly, like you rightly pointed out, we don't know what is going to happen during the weekend, and there are two events which have taken place. So US is basically uh, going to likely to launch one trigger, and another trigger is that the internal tension in the Hong Kong. The China wants
Hmm.
to take control of Hong Kong. So on account of those two reasons, we are going to see some bit of selling in the Asia also, and the oil demand in Asia also can negatively impact it. So I think oil, the fundamentals are not bullish from these levels, and we look to sell the rallies, and we are not very optimistic from the present price point of view, and we are expecting oil to remain under pressure. 2480, 2470 for the June contract, one should go short. 2540, 2550, you can put a stop loss, and expect oil to retrace back to levels of 2400, 2380
Hmm.
kind of level, what I'm expecting going forward. So not very bullish, mainly on account of the emerging market slowdown because of ongoing tension in Hong Kong. And another reason, like I said, that already all the positive triggers are priced in. So OPEC production cut, US announced yesterday the production cut of 1.75 million barrels. So, and at the same time, oil prices are up from 1100 rupees to 2500 rupees.
Hmm.
So
Hmm.
I think for the time being, 2600 looks top to me.
Right. And with this, another question I want to take with you, Kunal, on crude is that if you see the kind of up move that has come in, that's mainly uh, since OPEC, plus all of them planned production cuts. Now, with these production cuts, if you see the more bullish sentiment that we're seeing with regards to crude, do you think another question that comes up is, will producers be tempted to disregard the quotas within OPEC plus?
I don't think so. They cannot afford to do that thing, because the production cut what we are seeing right now is for 3 months. So this is not a perpetual production cut. So at least the first deadline is 3 months. So they are not going to extend the production cut post 3 months as of now. But if there is another lockdown coming in, if the coronavirus cases again start to surge, which nobody knows in the world what's going to happen. So like India also, it's marginally, things are starting to get relaxed a bit. In Europe, in US also, that is going to be the theme. So if there is no relapse of the COVID-19 again, then I think that seems very likely that after 3 4 months they will again start producing more. But right now the compliance are very strict. I read the OPEC report which came yesterday. All the countries are cutting the production the way they have stated in the month of April. So I think maybe Saudi Arabia, maybe Russia, all are sticking to the compliance, and the compliance as of now seems to be very strict. So don't expect it to crash to another level. It's just after a humongous run up, we are expecting prices to go down a little, tad down, and we are expecting a correction in oil prices, not very bearish trend right now.
Right. And do you see a supply demand mismatch? Because now, if you go to see, demand is something which has started to go up on the back of economies opening up partially. You have aviation as a sector which is going to start opening up as well in India as well on the domestic front. Plus, again, globally, you're looking at aviation starting up. So, the demand in terms of jet fuel is something which could increase the demand in terms of fuel in terms of locally is something which will increase. So do you think with these production cuts put together, there is a possibility that there could be a supply demand mismatch, and that in turn could impact prices once again?
Yeah. So I've explained the maths earlier. On 20th of April, oil markets were in a surplus of 25 million barrels per day. Now with the OPEC and US production cut, coming into the place, 12 million barrels of oil is out of the market. So 25 minus 12 comes to, we are still having a 13 million barrel surplus, and out of that, because of the relaxation in the lockdown, 4 to 5 million barrels of oil demand is going to come back. So on 20th April, when oil prices hit a negative, went into negative territory, at that time, the surplus, which was 25 million barrels, right now stands at 7 to 8 million barrels, considering there is a demand revival of 4 to 5 million barrels. So still, that 7 to 8 million per day surplus is very humongous for oil market. It is not something very big. So for oil prices to go up to 35 $40 from here, it requires that this surplus to further narrow down to 1 or 2 million barrel. So until that happens, we are not going to see oil going back to $40. So I think it will resist here, and it is not going to go up immediately from present levels.
Right. And any strategy that you would want to recommend in terms of today's session for crude?
Yeah, like I said, for the June contract, 2470, even if 2460, 70, good levels to go short. 2390, 2380 are kind of levels you can expect during evening session. And stop loss should be placed. If you are having a deep pocket, then you can put a stop loss of 2550. Or if you don't want to see that deep stop loss, 25 30 35 seems to be the good stop loss. And I'm expecting oil to go down. And even with the natural gas, I have been getting a lot of queries from morning regarding natural gas today also. The fundamentals are not bullish. I saw the weather forecast. Weather forecast is not indicating for the next week also very bullish trend. So 130, 31 again go short. 124, 123 again are kind of levels what you can see in natural gas. And natural gas, the strict stop loss should be placed at 135. So I'm not expecting even natural gas prices to go up.
Right. So that's the strategy with regards to overall when you're looking at crude and in terms of the oil basket. If you have to move focus to bullion, now, especially in terms of what's happening with gold, there is extreme amount of volatility as well that we have been witnessing, Kunal. But again, that undertone is still bullish because overall, if you go to see, gold is still an anti-monetary policy asset. So whenever the central banks are carrying on with printing more money, and that's something which will always give some bit of support to gold. If you have to look at the current situation, the kind of stimulus packages that are being announced across, what's the sense that you have in any strategy?
Okay, now when it comes to gold, people have the overall the general view. If you ask that what kind of view you have in gold, anyone will come across and say it is definitely looking bullish, right? And I have no doubt about it. So the long term view is definitely bullish. But what about short term? So people attending this session wants a direction that what we should do in near term. So my view is very clear. I haven't come across any report which indicates one should go short on gold. And believe me, when this kind of scenario takes place, so from ETF, from the start of the year, I was calculating from the million ounces to tons. So 3,000 tons of gold have been bought just by ETFs this year from the start of the year. So when I want to explain what is 3,000 tons to the retailer, the public who are viewing it, it is the world's production is 3,400 tons, and out of that 3,000 tons have been bought by gold ETF,
Hmm.
and that is not abating. They are still buying. So like the Western worlds are buying gold as if only gold is going to go up and all the asset class are going to go down, which is not the case right now. We have to be optimistic about the overall outlook of the global economy on the longer term. World is not going to come to an end because of this COVID-19 crisis. So my sense is that in a near term, gold prices should not go exponentially up. If the US data are bad, you may see a spurt, but I think that short term gold trend is down. I am having a firm view 47,100 today. One can go short. Again, you can see level of 46,500, 46,400. strict stop loss should be placed at 47,450.
Hmm.
Today, Dow Jones futures and the European markets are at negative territory. Indian rupee has weakened to almost 76 rupees today. So
Hmm.
that's why gold prices are going up. But I will not change my view for the evening session also. I think in near term, gold is not going to go up. The reason for that is the relaxation of lockdown itself is a very big thing. So in all the countries, this relaxation is taking place, and that is seen slightly negative for gold in a short term. There are no sell reports. What I have come across, I've been reading a lot of articles and report. No sell report. Everyone wants to buy report. Everyone wants to buy. And if I analyze the position of CFTC, the short positions have started to go up in last 2 weeks. So last year in 2009 we had more than 5.8 5.9 million contracts. Now the short position which was negligent is now back to 1.9 million. So I think this is an indication that a lot of people are even building a short position on the speculative front also. So uh, clear view 47,100, go short in gold.
Go short in gold at least for the current scenario. And coming now to base metals, Kunal, if you see the movement that we've seen, especially in terms of where non-ferrous metals go, both on LME as well as if you see on the Shanghai Exchange, clearly we have seen, I mean, nickel bucked the downtrend. Apart from that, if you talk about zinc and tin, both slipped, copper declined. Lead is losing momentum. However, aluminium is something which did see a marginal up move that did come in. Now, on the back of the US China tensions, what is the kind of impact we could see in terms of metals? And what is the strategy one should be adopting?
Okay, now things were running again good. The metal prices were going up, and suddenly this US and China spat is again started to intensify. So I think now we saw the copper premiums in China shooting up, and yesterday we were of the view that copper prices should go up. But yesterday evening, again this problem started, and again the US and China trade tensions are picking up. So I think for the trading perspective, copper can go down. I'm not very bearish on copper because, like I explained, that copper premiums are picking up in China. China is doing well. China is expected to announce stimulus package anytime. But for evening trading session, one can witness selling in copper. 407 good levels to short, 402, 401 are kind of levels which we can expect. Don't remain structurally short. Put a stop loss of 410, 411. But my thought in a near term, short term, 1 or 2 days it can go down, but it's not looking very bearish because China is not looking that bad as compared to the world, where entire world is planning to come off from the lockdown. China is already back to normal. Most of the cities in China are working, functioning normally, including Wuhan, which was the epicenter of this crisis. And I think China's government is going to come up with some stimulus during next week. So on the downside, one can start accumulating copper, but for evening session, it looks weak to go short. 402 are kind of levels which we can expect during evening session.
Right, 402 is the level we should be expecting during evening session as well. And apart from these, from the other commodities as well, Kunal, last time when we spoke, you did mention that you're seeing some bit of steam pick up, at least in terms of cotton. Anything else off track like this, which you think is looking good?
Yeah, so crude palm oil. India is an importer of this, and Malaysia is one of the major exporter to India. And Malaysia's export to India has dropped by more than 95%. So I
Hmm.
think crude palm oil looks good to me. 604, 602, good levels to go long farmer contract. On the upside, 615, 620, 625. This kind of level which you can see during next week,
Hmm.
and slightly bullish call on palm, and that looks pretty strong to me.
Right. All right, Kunal. Any other questions from the attendees? We have another 2 to 3 minutes to go where we could be taking a couple of questions from the viewers. We'll just wait if anyone has any questions. But I think overall, so far, at least we've discussed majority of the commodities that could be in the limelight from here on. And one question till any question, questions pour up. Kunal, any impact that we could see, in terms of covering up of positions overall as well? Because next week again is a truncated week. Monday is a holiday.
Yeah, so I recommend that don't try to carry a lot of positions, heavy positions in such kind of market where you don't know the entire direction changes after a tweet or after any negative or positive news. So we saw that vaccine news coming in, and there was total risk on trade going on. So I think do not carry your position. Let us wait on Monday. Try to manage your client's risk at this juncture. So it's okay if you don't earn, but managing risk becomes the top priority right now in this kind of market.
Right, managing risk becomes a top priority as well. And I think, Kunal, you've answered majority of the questions as well. No questions coming in from any of the attendees today. But thank you everyone for joining in as well. Thank you, Kunal, as well. Great insights that we've picked up in today's session. Thank you very much.